Welcome back. Strong corporate returns are driving the flow of year-on-year capital within family offices in the GCC, away from personal assets to corporate assets, according to a recent report. Invesco Asset Management Limited released today its third annual Invesco Middle East Asset Management Study, taken from across the GCC region. 40% of family office interviews cited a strong shift from personal to corporate assets, and over 34% more respondents thought capital was flowing towards corporates than to personal assets. The study found that the core factors driving capital flow to corporates are the need for corporate funding, the attraction of corporate returns, and corporate opportunities.
We found that high net worth individuals, families with wealth, were far more likely to take their personal wealth and invest it back into their own businesses. We think this is partly because the banks are less prepared to lend, lending rates are higher, but also that local investors are more comfortable generally still investing in their own businesses and in assets that they have control over, where they expect to get a higher return by investing in global markets. The big issue here, of course, is that investors are therefore not diversifying as much as they could to get more of a spread of risk and a spread of investments. Very interesting how we're seeing capital flowing from the broader Middle East and North Africa region into the GCC countries. What we're seeing is money coming into Saudi Arabia, Qatar, and the UAE in particular. We think the UAE is because it's seen as a political safe haven. Investors are telling us that political stability is the most important thing.
The UAE's non-oil trade hit 927.7 billion dirhams last year, of which 10 countries dominated 61% of the total value of imports of the UAE. The Federal Customs Authority revealed that the total value of UAE imports was around 369.6 billion dirhams in 2011. India came at the number one spot with an import volume of 105 billion dirhams, followed by China with 55 billion, and then the US with 52.3 billion dirhams. In terms of UAE exports, 10 countries received around 69% of the Emirates' exports, totaling 78.3 billion dirhams. India again came in at the number one spot, followed by Switzerland and Saudi Arabia. The 2011 data also showed that gold ranked first among imports with a value of 99.9 billion dirhams, followed by diamonds at 59.3 billion, and then cars at 28 billion dirhams. Gold, according to the FCA, also came first among exports in 2011 with 62 billion dirhams. With that, let's now look at the stock indices across the GCC.